500 million euros. That's what's currently under investigation in suspicious transactions from Wise, which is one of the most common used fintechs in the world and for global citizens. What most people don't get right is that the risk is not really, is Wise guilty, but what's going to happen now in order so that they can keep their license. We're talking about automated reviews, stricter AML regulation, frozen balances, offboarding waves for people who are using Wise for international transactions and their offshore structure. And as usual, this doesn't mean that you need to be involved into fraud so that this affects you. What typically needs to happen is that the algorithm just flags your account as a higher risk account, and we've been talking about this many times. A crypto payment, a USLC without real substance, a balance account that's too high, all of these things flag the algorithm. And this is the bigger picture of it and the bigger problem. Wise is definitely not the last EMI in the European Union that's going to go through this new enforcement framework. So this means if your offshore structure and your business relies on a single account like Wise or something similar, you have a single point of failure that we need to address. One compliance freeze and your entire payroll stops, the way that you pay your suppliers stops, and potentially your entire business treasury is frozen. That's not bad luck though, you can rearrange that with a system and therefore it is fixable. I'm Eric, and me and my team at Redomiciled help hundreds of clients around the world structure their banking operations for their online business or their offshore structure across 48 jurisdictions. Therefore, what I'm going to tell you today comes from me and my team actually knowing this inside out from the insides of the banks, onboarding our clients, and not just from reading a BBC News article like you probably did when you saw this news. By the end of this video, you will know exactly what this investigation means for your money and how a three-layered banking structure can actually protect your business and offshore structure. Let's dive in. So first of all, let's look at actually what happened here, because the more severe the situation is, the more severe the crackdown on the accounts still sitting on the platform will likely be, which is probably relevant to you and your Wise account, which I assume you have if you're still watching this video. On the 1st of June, the prosecutors in Brussels have announced that they're running a criminal investigation into Wise Europe, which is the European entity of Wise globally. And the numbers behind this investigation actually aren't small. The investigators are looking at $500 million, so 500 million euros in suspicious transactions that have happened on the Wise platform across 30 different countries. So what the investigators want to know is if these criminal organizations have used the Wise platform in order to launder money which was tied to drug trafficking and human trafficking and potential other money laundering cases. When the markets in London opened, the stock initially fell up to 20% and closed the day with 13 to 14% down, which is a pretty hefty move for a company with around 19 million customers globally. Wise itself said that they are cooperating with the prosecutors and that they have been compliant with AML regulation and that they have been doing everything in their power to avoid anti-money laundering happening on their platform, and this is just a normal thing that can happen when running a payments business, which might be true to be fair. So now when this crossed my desk, I wasn't actually too surprised. In fact, my co-founder William, I've wrote him a message and I was sending him this news and he replied with 3 words saying, "What a shocker." So everyone working in, global structuring and the payment space and helping with banking onboardings like us was probably aware that Wise was very, very relaxed on their regulations, and this news didn't come as a massive surprise. And the reason why this doesn't really come as a surprise is because we've been saying numerous times to many of our clients and also people who watch these videos that you need a proper banking structure, that you need multiple layers in order to protect your business. And a lot of people came back and they said, well, I'm running everything from a Wise account and I've never had any issues, no matter if I'm receiving high-risk transactions or I'm doing a lot of velocity transactions. Wise is always there and it works. And we were always kind of cautious because other providers like Revolut and Mercury are typically not like that, and they're a lot more strict when it comes to these types of transactions. And the reason why this doesn't really come as a surprise is quite simple. I mean, we work with hundreds of clients around the world on building banking structures that carry their offshore structure or their global business or their higher risk business. And we were always laying out concepts of having multiple accounts structured in a way that protect your treasury and your business. And a lot of our clients and also people who watch these videos came back to us and they said, well, I'm actually running everything from Wise and it's still working since 1 or 2 years. And we were always very cautious, but by seeing this and by knowing that people only use Wise accounts and it worked for so long, we knew that something was going on, while other accounts like Mercury, Revolut, which are also these more transactional accounts, are definitely a lot more stricter. And when you listen to the prosecutors, this also exactly tackles this topic, because they're currently not able to prove a single anti-money laundering case. They're actually just saying that Wise was way too relaxed and that the regulation on their platform was way too easy, and that going forward they need to be a lot more stricter, which is the main thing that they're trying to push through on Wise side right now. And that really isn't the first warning. There were previous cases in the past where Wise hasn't been really complying and they had massive fines. So back in 2023, there was the first case in Belgium where they didn't have enough proof of addresses of hundreds of thousands of their clients, which was leading to a first type of strike. 1 year later, something similar happened in the US and they actually got fined $4.2 million in 6 American states because they were also here not really complying with the AML regulation. So when we look at the history of Wise, even though they are very relaxed, we see that these things and strikes have happened multiple times over the past, and I think this time it might be the final blow. So what we see though in this type of payments in neobanking space is that Wise isn't alone and that the regulations are actually picking up. For example, Revolut was currently actually banned from launching more products in the European Union by the EZB. Then the German BaFin actually told N26 that they can't be continuing with their mortgage lending products. And then also Monzo, which is a very famous UK bank, was hit with a £21 million fine the same summer. So what we're seeing and what we're expecting is a bit more of a structural problem and a structural shift, and that those EMIs that were very easy with onboarding and with sending money, like Wise and Revolut, that they are getting under more and more scrutiny and more regulation, which also means that going forward, if your structure relies on a few accounts like this, you definitely need to sit down and rethink that in order to protect your offshore structure or your business income. So what you actually need to understand is that these EMIs like Wise are actually not a real bank. They're EMIs, which means Electric Money Institute, and that means that they are basically just a payments platform that's using underlying banking partners in order to execute transactions in those different currencies into those different countries. And that makes them very depending, because this means that if the underlying banks actually change regulation or they do not really want to support certain risk types anymore, then those players have to actually comply with that. And this is why relying on these institutions solely isn't really what's going to be working in the future anymore, especially when you're having an offshore or higher risk structure in your business itself. This means that the underlying partner banks are particularly careful for certain types of transactions. So when you're, for example, having transactions with a crypto origin, or they're dealing with higher risk, natures like gambling, or you're in a certain territory, so you're having maybe an offshore structure, then it's way more likely that your accounts get flagged. And going forward, if this regulation increases, this will only get tougher and tougher. And we've seen these patterns playing out already over time, and we've been telling customers you shouldn't just rely on these accounts, because over time they work, and then one time a certain transaction or a certain balance or just a general review is triggered, and then your entire offshore structure and payment structure breaks because the money in those accounts gets locked until you bring certain proofs. And even if you bring those certain proofs, you're often then off-boarded. And again, with those type of allegations and those type of restrictions growing now in the future, this will only become worse, and the people who will be suffering are the people who are having those accounts. So therefore, preparation is key. So what is it that you can actually do in order to safeguard your business or your offshore structure? So what you can do, and what we typically work on with our clients when building their banking structure, is the 3-layer approach. And of course you can make this more complicated, you can add more layers, but what we're essentially meaning with that is that you should have 3 different tiers, 3 different layers of banks in order to safeguard your treasury. And layer 1 is always your business treasury. This is where the majority of your money sits, and that should always be in a tier 1 bank account, and from here you should only transact with other accounts in your name, not with stakeholders, clients, etc., to keep this safe because that's the lowest risk. On the second layer, you then want to have these transactional accounts. These are the typical Wise, Revolut, Mercury, EMIs because they're typically very cheap and they're good for quick transfers, but those are the accounts that get more often flagged, but for day-to-day use they're great. So you're having high velocity, meaning a lot of transactions, but the balance generally stays more low. And then you have the third layer, which is the higher risk structure or the higher risk layer. And those are accounts that are used to, I would say, higher risk. So they are used to offshore structures, they are used to crypto or to higher risk industries. And when you transact with parties that are typically considered higher risk, you do want to use those accounts in order to safeguard layer 2 and layer 3. And this is a way how you can have a chain in order to protect your business in offshore structure, and you're not affected like if you would just have a single account that holds and does everything. And the most common mistake that we see is that people use these transactional accounts, or generally any account, for all of the layers. So you would use your Wise account for holding the majority of your business treasury, and you would use it for day-to-day transactions, and you would even accept payments from higher risk clients or higher risk stakeholders, which then brings a massive risk on a single point of failure, being this one account. So the question now is, what should you be doing if you're reading the news or you're seeing this video and you caught yourself doing exactly that? So using, for example, Wise for all of your transactions. And the answer is you shouldn't wait until your account gets flagged. You want to be proactive because when it gets flagged, it's typically too late. So the first thing you want to do is do an honest self-audit. Ask yourself, is this account, Wise or any other account, the only single point of failure? Do I have high balances on here? Do I run all of my transactions for it? And if yes, you want to go to the next step. In this next step, you want to withdraw the balances on Wise. So you want to open a tier 1 account. You can do that with us, or you can figure that out yourself. And you want to be parking the majority of your money here. And then that account is to safeguard your funds, and you only want to be transacting from this account to other accounts in your name. Then you can continue doing your day-to-day transactions with an account like Wise. And as a third step, we always recommend you to also open a few accounts that accept a higher risk tier. So these are, again, accounts that are familiar with offshore jurisdictions or higher risk industries like crypto. And then you have that 3-layer banking structure in place. And we can do that together with you, or you can write us a message if you don't know how to get started. As a fourth and final step, if you want to be extra prepared, be always sure that you have all of your documents, because banks, no matter which bank, they will typically want to see in those type of situations documents like your passport, your proof of address, your source of wealth, your audited statements. And if you don't have these documents, then there is something fundamentally wrong with your offshore structure and you're being somewhat incompliant. And that's definitely something that will get you in problems later down the line. So then we need to be looking at your entire business operations and offshore structure fundamentally, because if you don't have these documents, then nothing can really protect you. Having those in place is really the foundation for a functioning banking strategy. And to be fair, this video is really not trying to say that Wise is not a good bank. I mean, I use them personally as well. I'm also not saying that they have been convicted for anything. The only thing that we want to be saying in this video is that if certain type of accounts are more relaxed, they're seeing the scrutiny from the regulator, they're being dragged into these cases now more and more. And if you're relying on a single account, this is not what you should be doing, and you need to structure your setup properly. So the overall direction in banking and offshore structures is clear. This is definitely just a warning shot, and this will continuously get worse and worse in the future. And if you're seeing this video now, take it at what it is, a warning, and use that in order to prepare properly now. AMLA is live since this year in the European Union, and enforcement will ramp up, and we have more and more regulations already mapped out until 2028, especially in the EU, but also following in the UK with those type of EMIs and banks. So from here, maintaining a banking structure and opening bank accounts will get harder, but the reassuring thing is that structure generally protects you. It starts at the foundation of having all of your documents and a compliant global structure for your business and for you personally, and then using these accounts properly and working with experts like us to build that structure if you're not entirely sure how to do that. And therefore, if your business or your offshore structure is depending on a single or only a few of those fintechs banks, that's definitely the right conversation to have this week. As always, if you find these topics interesting, or you're looking to have a more compliant structure and a proper banking setup for you and your business, book a link in the description, meet me, meet my team, and otherwise we'll see you in the next video.